So what we will do right now is that for a brief 3 minutes, like we're running out of time. And when I was talking about time, 2 days ago, we had a pavilion, an event at the pavilion, where the experts were given 90 seconds to debunk some major theories and major stories. One of them was fuel versus food. And they had to debunk it in 90 minutes time. And they did a great job. So I'm not going to say 90 seconds, but you got 3 minutes. And the person who would kick off is with a presentation. And I invite Parag to come forward. He will present and for 3 minutes on his business. So you take the podium, and I understand your presentations with them.
So thank you, Joshua, for this.
And Parag is from GPS Ventures.
Welcome everybody. So I was advised, since we are moving from the space of biogas to biofuels, why don't we talk about the experiences of biogas and which upon replication could possibly help biofuels. Before that I start, I would like to give an anecdote that infrastructure, and no textbooks, nothing will teach you this, but infrastructure does not fail because of capital. Rarely it ever fails because of capital. I'm sure some of my folks out here will agree. It only fails because capital comes ahead of projects. So that I think is the real challenge, that capital tends to attract before you've really got the steps right. So when you look at something, models, investments, hurdle rates, everything looks good on paper. But when you start off, you suddenly realize that there is an issue on land, possession, approvals, etc. And suddenly, therefore, you tend to wonder about what's happening as far as infrastructure is concerned. So I think based on that, and I will now come back to you to tell you of what we do at GPS and what steps biogas as a sector has taken. Can you move on, please? Okay, thank you. So it's a very programmatic, platform-driven approach that is being adopted for biogas as a sector, and for us as GPS. We identify biogas clusters, biomass clusters meaning where there's adequacy of feedstock. And when I say feedstock, it is 3 to 4 times of feedstock available than the actual plant. We secure this feedstock. We ensure that there is the right parcel of land. And along with that, there are lots of policy incentives which are being built. And certainly in the ages of MOPNG, Pankaj Jain Saab, a lot of things have come over a period of time, which ensures that is the catalyst towards encouraging investments into CBG. At the same time, one of the bigger challenges is in terms of offtake arrangements. And we've actually joined with OMC partners to ensure that there is a long-term offtake arrangement, which de-risks yourself when the product is actually being made. 3, very, very standardized modular approach. This standardized modular approach helps us in not reinventing the wheel when you want to scale the business. So we don't look at it as projects. I would say it is more a product play. The minute when you get into a product play, you don't need to reinvent the wheel for every new project. Based on this, and I think this risk mitigation will answer the question on why CBG has taken its right baby steps to begin with, and the same then will get expanded to biofuels. So offtake risk, as I said, along with the arrangements of Satat schemes, we have these JVs. Technology risk, ensuring a full stack EPC player is a core of making sure that these infrastructure projects become successful. 3, policy level mitigation. Lot of incentives, lot of policies have been given in terms of priority sector lending, central financial assistance, a market development assistance for a new product of fermented organic manure. Now, these become important when you want to open up a new product and a new market. And finally, as I said, in terms of feedstock risks are mitigated through a command area. So you don't compete with everybody for the same feedstock. And at the same level, you ensure that 3 to 4 times of the feedstock is actually available for that parcel of land. So this is just a small case study on how this has become successful. This is the largest non-recourse project financing done in the CBG space in the country. It's a 9-project basket, a portfolio between us and IOC. And this has been successful because of the sponsor strength that IOC brings in and GPS brings as a EPC player, proven track record, offtake. And importantly, we pooled these 9 assets together to ensure that whilst you may have different experiences across different projects, one project doing well, one project may be doing lower, is able to cross mitigate itself. So that, I think, pooling of assets has become a important task for us to ensure that there is risk mitigation. And finally, strong independent feedstock audits. So, what more could be done? Certainly, as time progresses, market development support could grow to bigger things. We do have something on the similar side on the biofuels. We are likely to see a policy coming for something like sustainable aviation fuel. Similarly, there are global policies on maritime operations for bio LNG, and you should expect some of these to come to see out here, which could make it bankable, support, and attract capital for biofuels as a sector. Thank you. I will take a pause here. Happy to take answers upon the panel discussion.
So we would then move. This is how we're going to do it this afternoon. We've got two themes for discussion today. Theme number one today would be strengthening policy and partnerships to mobilizing finance in biofuels. And the second one will be unlocking investment opportunities and addressing the financial gaps. So they always say that there's not much money if there's no policy. So let's tackle policy first and see where those areas are and then follow it up. In between these two themes, I'd like to also launch a white paper that talks about investments in sustainable biofuels. And then soon after that, we will continue with the second theme. All right, so let's get going. I've got the panel here seated with me. I've got 4 of them, and we'll have 2 minutes each to answer a question. So let's start with the policy first. And Mr. Jain, you are a policy person, so you've led policy making for several years. So if you could enlighten us, what role can policy frameworks and regulatory incentives play in unlocking sustainable finance for biofuels?
Thank you, Joshua, and it's an absolute delight to be here to talk a bit about a subject which often takes a bit of effort to demystify. And it is not that it's because a complex subject, it is just that there's a lack of enough familiarity. You end up hearing terminologies which portray very different images, mental images in different parts of the world. So you'll hear biomethane, biogas, ethanol, bioethanol, and you keep wondering, what is what? Is there a difference? And you run the risk of appearing illiterate about these things just because somebody else is mentioning that. So if I explain how policy formulation looks at all this, see, at the core, there are 2 or 3 audiences which any policy has to address. One is obviously citizens. So citizens have to get a sense that yes, policy is meant for them. But then equally it is businesses in this case. And beyond businesses, again, policies will never stated in as many words. It is also the people who are putting in money in terms of lenders, investors, and so on. So if I were to really say that, okay, project proponents, financiers, and citizens, that is really a hierarchy which actually determines policy formulation in this domain. Now, having said that, there is a learning curve for policymakers also, because the kind of risk that we are trying to imagine, which money has to carry or money has to address, are multiple. And there are very few frameworks which actually help you get it right in the first place. So you think you have solved all the problems and suddenly something unanticipated comes back and bites you. I think the point which was made about, Parag made about implementation. These were, policies often thinking of an ideal situation, but reality comes back and hits you. It's very hard. And then policy struggles because to make mid-course corrections becomes that much more difficult. In the case of biofuels, the additional complexity is that the biofuels is not one homogeneous entity. Each biofuel has its peculiarities, has angularities, and you have to understand what problem you have to eventually solve. To give an example, it takes some bit of understanding to, it takes some effort to understand that the profitability of biomethane would actually come from manure and not from the gas. So you keep wondering which is the byproduct and which is the main product. And if you haven't solved for that, and you're thinking that, oh, what is the problem? Somebody has made gas, somebody else is buying the gas, we're all good to go. It doesn't work that way. But then that's not a problem you'll have when you're doing SAF or when you're doing bioethanol or when you're doing biodiesel. So the nature of the problem changes very dramatically, which means that the iterations which the policy has to go through in terms of unpacking this and making it in a language which is easy to understand becomes devilishly more difficult. But it's a problem which has been solved.
Thank you so much. That was a lot of information to unpack. Let's move to the next question to you, Ms. Anita. In your experience, how do you think public-private partnerships can be structured or enhanced to maximize financial flows into biofuel projects?
Thank you very much, Joshua, for having me here, and very interesting presentation, and really appreciate your comments, Mr. Jain, because I think you hit on a sort of very fundamental issue, which is that not many people fully understand the biofuel sector, partly because there are multiple products, partly because it often gets seen as a very complicated process, both in terms of throughput as well as in terms of technology. And maybe some of it comes from our early experiences. Having said that, on the public-private partnerships, I just want to sort of say that, I always look at global benchmarks. And if you take the entirety of biofuels, there are, the market is already, I think, somewhere in the range of $111 or $12 billion. And it's expected to double by 2035, so in another 10 years. So India, given the growth, given all the fundamentals of this economy, I think has a great opportunity in biofuels. That being said, it reminds me a lot of solar back in 2009, when you had a couple of projects. It was seen as expensive, different technologies, lots of stories about things not taking off, and then we've seen how it's changed. And as Parag mentioned, we've already seen this in the CBG space. So for PPPs per se, the way I see it, the most important thing is to demystify and to really give people examples of successful companies like GPS and others, and successful projects. And that in itself will attract capital. And the second is widening the level of the playing field, bringing in more private sector players. And for that, again, awareness, demystification is very important. And maybe a couple of projects where the Satat scheme is a good example, where for biofuels as well, really putting down what could that be, which brings in the initial capital. And once you see success, that will beget further success.
Thank you. I'm going to go slightly different on this. I'm going to follow up on the question that I asked Mr. Jain back to you, but I'll give you an exemplar. I was talking to someone, an expert from India and from the CBG, and this morning, and I said, what are the risks you face? And with such a large market as India, where you have so much of waste that goes into the landfills, why hasn't it taken off so much as we expected? His response was typically, look, it depends on a city commissioner to city commissioner. A commissioner comes for 2 months, and after that, 2 years, and then he gets transferred and someone else comes. So the next person who comes doesn't sometimes have the same fervor to carry on. I was talking to a prime minister of a small island state a few weeks ago again, and I asked, what does your fuel import look like? And he said 38% of the GDP. It used to be 42, it's come down to 38. And I said, what is it? And he says, this country is seen as a coup-ridden country. The risk of one government going, another government coming, isn't that great. I mean, the risk is too high. Investors, international investors, do not want to come into a country like that to invest. So the business continuity is lacking. I'm not sure if that's the same, but this is an expert who told me about India, and that's another prime minister from another country. So can there be policy that can avoid this risk or mitigate this risk? And after you, if there's anyone else in the panel who'd like to address that, I'd open it up.
Yeah, no, I think that's a central point. As Mr. Jain said, there are these stakeholders, and one of the important stakeholders are financial institutions. And at this point if you look at all of these uncertainties, if all the risk goes on the project developers, right, that's not a healthy ecosystem, right? Because, if the project developer, so that risk has to be shared. So that point about risk sharing is very important. And, to be frank, policy shares a lot of that risk. I mean, if there's a certainty in the policy, different governments changing, it should make a difference. So that policy ecosystem, I have to say, I mean, I've been working with Ministry of Petroleum for quite a while and supporting the policy mechanism. It's just, we are always asked that, what's the learning from the world? And I think on the policy ecosystem, we see that this is one good example of India for the world. Because we say that, the policy ecosystem, which is here to take this really sustainable biofuels, whether it's biogas and sustainable aviation fuels, that changes, right? So that is India for the world, really. Biofuels, that is where the world is looking for India to take a step. But for that de-risking, really, as so you were saying, that the nature of the problem changes, the size of the problem changes. Biogas, you have projects which are 10 million, in that ranges. You go to sustainable aviation fuel, it's a very different range of numbers. So and then players changes if they're medium, small enterprises or they are large enterprises. And some of that risk, as we see in India, has been shared by our marketing companies, and that changes the risk perception. So in the end, what we are trying to do is kind of share that risk. In terms of that, broader risk, which you mentioned, that as people change, as circumstances change, ideally that good policy would avoid that. But also organizations like, we do see that multilateral development banks play an important role in de-risking those solutions. We have had innovative mechanisms in different countries, such as risk sharing mechanisms, guarantees, credit enhancement. And, credit enhancement is a complex world, but in this case, just sharing of some of that risk burden on the shoulders of development institutions. So I think that whole credit enhancement plays an important role in leveraging. So in summary, basically three levers, right? Policy, and financial institutions having good systematic knowledge of that, so that they don't perceive this as risky projects. These are risky projects, actually, if they're complicated, from all the way from aggregation of feedstock to providing of biogas or aviation fuels, plus managing biomanure and all that. So how can they demystify that? Yes, that's possible. And then finally, all parties coming together to de-risk the financial ecosystem. I don't know if anybody else wants to.
Thank you so much. Is there anyone else in the panel who would like to address it before we move to the next?
So I'll just add one more thing, and I think the case of example was already given in some context, that when you have a new product, policy becomes important. For example, when CBG started, there was a policy making of Satat scheme, then the synchronization scheme. Now the scheme exists, and that scheme exists, independent of, states, locals, because this is more a central scheme. Similarly, and rightly said, that when we look at CBG, there is a very important byproduct, and therefore the byproduct also has to be a success. Now, there is a market development assistance scheme for the byproduct of fermented organic manure. So, this schemes and policy making actually helps and tides over time as far as projects are concerned.
Thank you. Would you like to?
Just let me add a bit to this. See, when you're doing appraisal, you are listing out various risks, right? Now, there are risks which are intrinsic to that industry. So I think to take your example, Joshua, which is that, okay, a municipal commissioner getting changed, and therefore what happens to municipal solid waste? Will I be charged tipping fees, or will I continue to get segregated waste, not get it? Yes, that's one set of problems. But then there are other circumstances which are more cross-cutting, which are not industry specific. So the example of a coup you gave in, say, government change in an island country or wherever. Look, catastrophes can happen anywhere. And I don't think we can actually plan for such catastrophes. That is a cross-cutting risk which has to be kept as something which the heavens can fall. So let's keep that out. You can't in a sense, add a cost and say that through this cost I'll mitigate myself. It doesn't work. It's just yeah. It's like a force majeure you have to live with. But I think what we need to understand is that if we think, and there's a big if here, if we think that policy action or action by a quote-unquote government player is fundamental to the existence or continuation of the project, then the way we understand and appraise that risk, that has to duly factor that in. And again, this will change from product to product. In the case of ethanol, that risk was not at the supply chain end, it is probably at the offtake end. In the case of compressed biogas, it was at the feedstock end. In the case of SAF, it may be at the airline end. Now, if that is the one big risk, so in a sense, the degree of risk or the impact of that risk, that will probably determine which biofuel I want to put my money in.
Thank you. Thank you so much. There's a lot of information again to deeply think about. Anita, before we move to the next one, can a finance facility take care of such risks that Mr. Jain was talking about? When you classify, when you assess and put them into boxes, which one of those can a finance facility tackle?
So there are some risks that a finance facility could take care of. For example, if a project will take longer to develop because it's the first of its kind, then some form of catalytic equity, philanthropic money always helps. We've seen many successful first of its kind projects which had that kind of what in India we call viability gap funding. And I think that's very important. But having said that, if we want to mainstream an industry and make sure that you attract long-term institutional sustainable finance, then the sector itself has to become commercially viable. So always keeping in mind that whenever you use subsidized funding or catalytic funding, whichever way we call it, you have to keep the long-term picture in view. How do you commercialize it and mainstream?
Okay. Thank you so much. Thanks for that insight. We move on to the unlocking investment opportunities. Over to you, Gauri. Where do significant financing opportunities for biofuels currently exist globally? And what do you think are the key barriers limiting their realization?
Thank you, Joshua, and thank you, Anita, for having me on this panel as well. It's great to be here, and I think what I'd like to share is I'd like to come back to something Anita said earlier about global benchmarks, and I think that's very important because especially in a nascent sector where a demystification is needed, there have to be the right global benchmarks to start with. And one benchmark which I tend to go to, because when you look at the range of new energy transition technologies, they're across technology readiness levels, is the climate bonds framework. And what I find in that framework is very relevant benchmarks, which of course adhere to a 1.5 degree pathway. And if you take that as a starting point and then say, okay, what could be on say, a 2 degree pathway, for instance, it's fascinating. The climate bond framework is used across geographies, actually, as something people adhere to in part. And if you look at their biofuels metrics, it's about 80% reduction in emissions from a fossil fuel baseline. It's about 80% improvement in energy efficiency. And if electricity is generated, it is also an emission target of less than 100 grams of CO2 per kilowatt hour of electricity generated. So I think that metric driven approach can give a lot of confidence to investors that there's a sound basis, that if I'm not staying on a 1.5 degree path, if I'm say it's a 60% reduction, even why? And I think that is important. The other aspect, and again, I go back to the fact that this sounds like the solar of 2009. If you see solar today, you have new investment structures like InvITs, for instance, in India as well, right? Where it's looked as like an infrastructure investment class, where long-term capital comes in and debt is handled in a certain way, and there's an SPV structure. So I think there are many, what's fascinating about the energy transition world is we can learn from each other, right? We can learn from what's happened in solar, what's happened in wind before, and translate that. I find it fascinating how the hydrogen world is learning from the gas world, for instance. We're seeing contracts for differences where that delta that has to be funded was done by Spain and the UK, is now being done in Japan and Korea for hydrogen related projects. So I think there are many structures globally, and that could begin to point to where can this ecosystem come together. So I would start with the benchmarks.
Thank you so much. Well, that's another twist to it. Let's go on to the next question. Which financing approaches or mechanisms have proven or would prove to be most effective in mobilizing investments? I'll start with Mr. Jain, and then I'll go to Ms. Anita, and then Harshit as well.
See, the thing is this. Sometimes we make the mistake of thinking that somehow sustainable finance or responsible finance lives in another world. Any finance needs returns, right? Whether it's green finance or sustainable finance. So the lens has to be the same. Money comes in, money expects returns. And therefore, if you are razor sharp focused on the returns, half the problems solve themselves. So if you think that 6% return is great, or actually because there's a moral argument that we are doing something good and therefore 6% is good. Money doesn't work on morality. At the end of it, projects have to deliver that kind of money, which would justify the source, whether it's sustainable, non-sustainable, any kind of money coming in, it gets justified. So therefore, if you are going from a commercial finance basis, then normal ways of debt equity have to play out. Which means that whatever safeguards you would put, you're not going to carry excessive debt, you're going to carry debt to the extent that the project can bear. It is not going to become a non-performing asset. And equity returns are, they can come later. That is okay. There can be a timing issue, which I think equity owners can live with. But at the end of it, they have to see a pot of gold for themselves. And therefore, what we have seen is that equation works well often if some of the incentives may not necessarily be monetary, but could also be about assurances about the fact that somebody is taking care of this problem. We tend to rush into thinking that, okay, if government gives an upfront grant or a subsidy, somehow the problem gets solved. It doesn't. It is only a temporary palliative which you are giving. It has to eventually, the problem has to solve itself, and which will mean, so to take an example, some of the risk could get mitigated simply when you have a partner of a certain kind. So many a times when you bring in IFC or World Bank as a partner, it is also to manage political risk rather than simply the money they bring to the table. Parag mentioned about the off-taker becoming a partner in a JV. That is also to manage your off-take risk. So in biofuels, what we have seen is some of the approaches which work very well is a larger sense of partnership which you are bringing in, so that one of the persons who's there in your entire chain and who's critical to it is also having skin in the game, because they were there when you thought of this or when you brought them in. So they realize that if they don't play ball, they're actually cutting their own nose to spite the face.
Absolutely right, the way you put it. Thank you so much. We'll just go a quick 1 minute round again. We start with you, and then with Ashit, and then, of course, Gaurav, if you could finish it off. Same question. If there are any further insights to what Mr. Jain said.
I'll just add to what Mr. Jain said. I think you covered a very fundamental thing of, all investors come forward. And these days, even the philanthropic investors want to see their capital returned. So, and often the risk perception comes from other issues surrounding the project, policy being one. So the more we can show stability in policy, as we did in the CBG case, I think that really bodes well for the sector. The second is also aggregation, because you mentioned, Gauri, InvITs, and I think one of the beauty of InvITs is that, in any sector, an individual project is too small to attract the larger financiers. If you can create a platform that aggregates projects, then you have a better chance of attracting, and then the aggregation also gives you some diversification of risk.
Okay.
So
Thank you. Thank you. Harshit?
Yeah, no, I think it was Pankaj Jain and Anita made very clear. I think just very quickly I would put that at the central point we also see that financial institutions who are going to finance these projects, whether whatever kind of financing, they see risk. Right, they see risk, and the risk could be kind of who is the project developer, do they have balance sheet? If they don't have balance sheets, right, that becomes a big problem, and then that there some different kind of financing need to come in, because I don't know if equity is a problem, but debt could be a big problem because of the risk, right? And the risk could be real or perceived. And we see that in early stage projects, biogas projects was perceived at high risk, and so that perception had to be changed, and that perception probably was not real in many cases. I mean, so that perception had to be changed, and that's why some initial projects need to be shown successful, and that initial financing is slightly different than long-term financing, and that's where some risk-sharing facilities, development banks need to come into play. When it comes to real risk, right, as you were saying, the whole ecosystem, whole ground needs to be very stable and cannot depend on subsidy, grants, or first loss. They have to be on right footing. If you think about these three, I see that biofuels is a great story in India. Biogas is a great story, and the challenges there are slightly different, which have been mitigated quite a lot right now with OMCs partnering and taking some of that offtake risk. The offtake risks do play an important role, and they are financing instruments for that. We take sustainable aviation fuels, for example, the payment security fund, because the pricing is not known. Mr. Jain said about the airlines. You don't know, you don't have long-term pricing for sustainable aviation fuels like you have for petrol, diesel, and all that. So, right, there's this pricing risk, but there are instruments in the market to make sure that we have that, which gives some kind of offtake security for the initial projects, so that that this industry moves forward. Thank you.
Thank you, Gauri.
Well, I'll fulfill my role as a co-moderator and request you to answer. What role do you think policy frameworks and regulatory incentives can play in unlocking sustainable finance?
Well, like I said earlier, I gave you an example of a coal-ridden country. I think to me, policy should be long-term and proper consultation needs to be taken. When policymakers get the policy in a hurry, a lot of loopholes and gaps. So policy does play a role, policy framework plays a role if it has a thorough consultation and all quarters are involved in it. Politically speaking, people who oppose the sitting government are taken into consideration and their views are taken into consideration, and the policy has a strong foundation. It minimizes the risk, although it would not eliminate it, it minimizes it, because whoever comes after them would have had already inputs into it, and people know that they've had inputs into it. So then the chances of it falling apart, there could be modifications, but it cannot entirely be taken away because it's had the input from several quarters into it. So that's how I'd go about it if there's a policy framework, and if that's a strong policy, then it's bound to win over a period of time.